All right. Good morning, guys. So I decided to do the video again. The initial video I did was good, but I decided to talk about something which was important, and that is money management. Because I've posted a lot of videos on the channel which are absolutely amazing, which can give you so much edge in the market. But over time, I still get to discover that some certain percentage of people who are supposed to do well in the market are actually not doing well. And it brings me back on the need on how you can grow your account. Okay, so I'm going to be approaching this lesson with the mindset of a trader who is starting off trading with 20 or $30. There are some important things you need to know when it comes to growing your account, especially trading with Deriv, which has a lot of manipulations. Number one, for those of you who are beginners, for those of you who are beginners, it is very necessary. It's of optimum importance that your beginning part of trading should be focused on catching spikes. Yes, so it should be focused on catching spikes. And I mean every bit of what I just said, because the concept of Deriv as regards boom and crash is for the crash 1000 pairs. If we go to the 1 minute time frame, you'll see long candles like this. Let me zoom in closely. Long candles like this, like this, like this. Yeah, you'll hear a lot of traders come up. You see a lot of videos on YouTube saying whenever a spike happens, you try to trade against the spike, get 3 to 5 candles, and then exit. That is gambling. It's not going to take a while. You're going to blow your account. All right. Whether you like it or not, I'm not going to really go into so much details about it because, okay, currently while the class is going on, you can see this long spike that happened. It's not like you cannot trade against the spike. You can trade, but you need sufficient knowledge to trade against spikes, and then you need leverage to trade against spikes. And why is trading in line with spike important? Because the concept or the way Deriv is built, if you are trading against spikes, example, you are buying from this point and you want to hold, you see this distance from this level to this level. Let's say you entered a buy trade with 0.25 at this point, and you intend, and then let's say you place a stop loss, okay? And naturally, assume here to be $1, but because of this spike that happens, as long as it gets to this particular point on a single spike, if you were supposed to lose just $1, you would be losing $3 to $4. It depends. Okay, so I just need to make it easy for you in your beginning stage of a trader in binary. Trade in direction of trying to catch spikes with the trend. I'm going to be explaining that in the video. All right, and because if you don't have sufficient knowledge on how to trade against spikes, or I don't subject myself to trading or catching spikes, but most of you have a very small account. And the reason you need to trade in line with spike is because if you're trying to catch spike, you can choose when to exit the market in what loss or profit. You can say at 0.50 cents, I want to exit the market. But you cannot say that trading against spike, because whatever spike happens, the distance carried by that spike is the amount of money that will be deducted from your account. So imagine trading a $20 account and then you hit by spikes 3 to 4 times. I mean, there is that possibility. Example, you're trading boom 1000. A single spike on boom 1000 using 0.20 can deplete $7 out of your account. But if you are trading in line with spike, even if it's not going your way, you can personally choose to hold for a long time. You can say, okay, $1, I'm exiting the market. $2, you're exiting the market. All right. Whatever kind of trading which removes you from controlling what you spend to risk, avoid it. It becomes gambling. Whenever your money management or your risk is not defined in trading, there is every possibility that you are going to blow your account in a short while. So I'm going to be giving you a blueprint for how to scale your $20 account upwards. It's coming together with the strategy. All right, but I'm hoping I'll be able to finish all of it in one video, but I'm going to take my time to do this. So, but before I go into the strategy, I'm going to also explain the need for you to join the mentorship. It's very important. I'm going to encourage everyone to join the mentorship. It's going to scale you. It's going to, I said, for those who watched the last video, if you subscribe, like, and make a comment, send me a screenshot. I'm going to do 50% whooping discounts for you. Yeah, the offer is still available. I just want to see everybody succeed, okay? I'm not concerned about the money. I'm more concerned about you succeeding. The proof of my results as a teacher is the fact that you have succeeded, and that's the legacy Trade to Win strives to keep. All right, so without much stories, let's get into how we can successfully grow a $20 account up to $1,000. So first things first, you need to understand leverage. Okay, leverage is the leverage. In my own time, I'm going to make it is the amount of capital, you need to stay in the game, or the risk required to keep you in the game. There are a lot of school of thoughts on leverage, but I know why I'm coming from this angle. And so that is why I'm saying $20 account. Why? Now, this is the plan. If you're starting trading with a $20 account, all right, and then there are certain things you need to understand. Certain things you need to understand. And number one is, what am I risking for every trade I'm entering? All right. So your risk has to be defined. Risk has to be defined. So if you're starting with a $20 account, I'm not going to use percentage. Okay, risk $1 for every trade. $1 for every trade. So what should be your reward? $3 should be your target for every trade. All right. So in essence, we are seeing risk to reward should be 1:3. And this is what I'm going to be really focusing on in order for you to have that edge. So you are starting with a $20 account. And note, you must focus. What should be my style of trading? Because if all these things are not defined, you will live your life doing whatever comes my way, does that, your trading has to be defined if you need the edge in the market. Style of trading, catching only spike. So I'm giving you a blueprint. Spikes. Do's and don'ts. So what should be my do's and what should be my don'ts? Don't risk more than do's. Okay, let me just say don'ts. All right. So number one, do not risk more than $1, because why? You're starting with a $20 account. Don't close. Number two, don't close the trade until 1:3 has been hit. In essence, do not close the trade until you have achieved $3. Because this is the thing, when I was doing this review with the students in the mentorship platform, the standard for succeeding in trading is 1:3. Mathematically, it has been proven. Scientifically, it has been proven. Anything less than 1:3, you stand the chance of blowing your account in the long run. I see people do 1:2 and all that. I'm not going to go into details why 1:2 will not keep you sustainable in the market, because 1:3 is what is required to keep you in trading till, I'm not going to say till you die, but as long as you want to keep on trading, 1:3 is the most basic standard that is going to give you an edge. So we are starting with a $20 account. Make sure you write this down. Your style of trading should be catching only spikes. Why? Because at $1 loss, you can close the trade and then you have $19 capital to still be in the game. So the thing is, can you lose 20 times without winning one single trade? I'm going to delete this. Is it possible? Because the strategy will come with a test. So is there ever possibility that you can lose up to 20 times without winning up to 5? Okay, so let's see. We have a $20 account. So let's take a test, all right? We have a $20 account, startup. And we want to do a test run, risking what? $1, and our target is what? $3. So we are going to put here risk $1. Please follow me closely. And then target is what? $3. Take a look at what you have been missing. And if you fail to do this, I'm sorry, I wouldn't even want to listen to you when it comes to succeeding in trading, because you must put down these hard rules, all right? These hard rules in order to succeed. So I'm starting up with a $20 account. So my first trade, I lost what? $1. How much will be left? So on this other side, let's put capital, right? Okay. So I lost $1 on my first trade. How much is left of my capital? $19. So follow me closely. The next trade, I lost $2. Sorry, I lost another $1. How much is left of my capital? $18. I lost my third trade. How much is left? $17. Follow me closely. I lost my fourth trade. How much is left? $16. I lost my, yeah. So how much will be left? $15. Just follow me. You are going to enjoy this lesson. So we lost our sixth trade. At this point, you start feeling like your village people are after you. How much is left? $14. You lost your next trade. How much is left? $13. This is the point you start sending me messages. Sir, what you're teaching, I don't know if it's actually working for me. Yeah, I get that a lot. Yeah, it's working. That's why we're still in the game. So you're left with $12. At this point, you feel like giving up. Your psychology is actually messed up. So we have lost how many trades? 1, 2, 3, 4, 5, 6, 7, 8. 8 trades. All right. And so you win the next trade. So you win what? $3. I want to show you why a lot of traders are succeeding and why your capital moves towards 12, 13, 14, 15. Capital goes back towards $15. All right, you win the next trade. Capital moves towards $18 because 15 plus 3 is 18. Just 2 trades is almost taking you back. And then you win the next trade. Capital moves towards $21. And then you win the next trade. Capital moves towards $25. And then you win the next trade. Capital moves towards $28. Now, you had 1, 2, 3, 4, 5. And then you had how many losses? 1, 2, 3, 4, 5, 6, 7, 8. And then let's assume we lose our next trade. Capital goes towards $27. $27. Capital, let's say we lose another trade. Capital goes to $26. So permit me, this loss should be what? Capital, not like you lost, so that you don't get confused. I'm taking my time to. And this can only be achieved because if you are trading against spike, you cannot say you want to lose only $1. You cannot say you want to lose only $5. Whatever Deriv choose to take from you, it just messes up your money management plan. Whatever has no specific plan will not succeed. Your money management must be specific. Your reward must be specific. It is the discipline of specification that scales your account. It is the discipline of sticking to the rules that grows your account. Nothing else, guys. Absolutely nothing else. So even the most useless strategy on earth with a 40% win rate can keep you profitable. And then you now have a beautiful teacher like myself giving you crazy good win rate strategies over 50%. So why are you still failing? So this is the reason why a lot of persons are failing. So you can see even after losing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 10 losses, yeah, and 1, 2, 3, 4, 5, and 5 wins. And do you know the funny thing is, even if we lose our next, let me just reduce this a little, scale up, and then lost, 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 lost. So this is what is going to happen. We are going to have 25, or capital reducing. We're going to have 24. We are going to have 23. And then we're going to have 22. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. We have 15 losses, and then we have just, let me come closer, 15 losses and 5 wins. That is just a 25% win rate, guys. A 25% win rate is giving us profit. I mean, guys, this is crazy. This is actually crazy. The reason we are not succeeding is because there is no defined money management. There is no defined money management. Okay, once your money management is defined, the possibilities of losing is not there. All right, so what is the win rate for this? We'll just do 5 divided by how many trades did we take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. All right, so we took 19 trades. Okay, 19 trades, and we had how many wins? We had 1, 2, 3, 4, 5, right? You just do. So 5 divided by 19 times what? 360, and we have 26.81. That is our loss rate. Okay, and this is amazing. This is amazing. This is, sorry, our win rate. Our win ratio, we had what? 29. Yeah, 29 from my calculations. 5 divided by 19 times 100. So 26 rather, 26 points is still keeping us what? Profitable. And then when you now have a strategy, so the reason why you go online and you see 90% strategy, 80% strategy, as long as they are not using a 1:3, it's more like having a 10% winning rate. Because even if you do 1:2, it's going to take a while to actually succeed because of the psychology of losing. All right, but the 1:3 factor Whenever you win a particular trade and then it gives you $3 with a defined risk of I have been losing $1, it just gives you that sense of relaxation that yes, we can succeed. Okay, so we are done with the money management. Let's go to the strategy proper. Let's go to the strategy. And then this video Deriv should not see it so that they don't block me. But this is what is going to change. I think this video should have the highest views on the channel because this is the secret of trading, guys. This is the secret. So the parabolics are, so this is a strategy that trades with a trend and gives you entry. We are going to be using the Ichimoku. These are my settings for those of you who are used to trading view. Defaults, everything is defaults, and these are my settings. And then the parabolics are, I'm going to change it to black for the purpose of this video and then increase it a little so that you guys can see it clearly. So I'm just going to hide the Ichimoku. Let me explain how these indicate as well. But before that, we are using the multi-time frame analysis. So strategy. The strategy is based off on multi-time frame analysis. Okay, and what else do you need to know? These are the rules for swing trades. H4 for analysis, and sorry, H4 for analysis, then H1 for entry. H1 for analysis, M15 for entry. Then for scalpers, M15. So for scalpers, we have M15 for analysis, and then M5 for entry. So these are the rules, strategy rules for the multi-time frame analysis. So strategy, multi-time frame analysis, for those of you who like swing trades, those of you who work a lot, H4 for analysis, then your H1 should be for entry. If you use H1 to do analysis, M15 should be your entry. And then for scalpers, intraday traders, M15 for analysis, M5 for entry. So it may also interest you to know that this strategy works on, okay, this strategy works on Forex, yeah, it works on Forex, it works on crypto, but I'm not going to be so much concerned about that. So now we have the parabolics on our screen. So how does it work? So let's use H4. Let's start off with the H4 analysis. So this is crash 1000, right? If we are using the H4, the first signal that shows on the parabolics we are going to put a line, a vertical line on that signal. So this is a buy. So how do you use the parabolics? Whenever it shows from beneath the candles, from below the candles, it is considered a buy signal. All right. So we just place a line. The first parabolic SAR that shows, I'm not talking about the second, third. No, the first one that shows, we place a line there. All right. So we place a line on this, on crash 1000, the parabolic SAR, and then we'll go to H1 to find our entries. All right. So the next signal that comes from the parabolic SAR, yeah, so this is where the H4 was, and then this is the new signal. So you're going to place a buy, but please note, for the money management, please note, for you to scale your account, only sell on crash pairs. And that is the crash 1000, crash 1500 and 300. Only buy on the what? Boom pairs, because we are trying to focus on catching what? The spikes. Only buy on the boom pairs, and that is boom 1000, boom 500, and boom 300. I'm not teaching volatility for now. Okay, so please take note of this. So for crash 1000, in as much as I'm giving you a buy example, these are, if you are advanced, if you understand what you're doing, you can do this, but I'll be focusing on catching spikes, all right? So please note, only sell on crash pairs, only buy on the boom pairs. Take note of this. All right, so let's continue. So our multi-time frame analysis says on H4, for swing traders, you're going to work. You can always use H4. Once parabolic SAR gives you a buy signal, you use H1 to what? Enter. All right, so use H1 to what? Enter the trade. So you are going to place a buy trade here, and your target is 1:3. So if we place a buy trade here, and then where should I put my stop loss? Below the previous candle. So this particular trade hits our stop loss. So let's say we are risking $1 here, we would have lost $1. All right, when did we get another new signal? We got another new signal here. Here, are you seeing here? Good. So you take this, you take this. Your stop loss should be below the previous candle, and your target 1:3. Now, can you see this particular trade has hit our take profit? We lost $1 initially, and now we have made this first trade, we lost $1. On this next trade, we what? $13. So is our account positive or not? It is. So we have another new trade here. We can see parabolics are giving us a buy signal on this candle. So our stop loss is going to be below. If the candle is too short, what you can do is you can place two candles, and then it's some of those modifications I do. And so you can see that it's still going your way, all right? But if you did place it below this, it would have smashed you out, all right? But in cases where the candle is very short, you can extend a little to the previous candle. So you can see that this would still be going our way. And currently it is on 1:0.65, not up to 1:2. So, sir, when can I adjust to break even? When it gets to 1:2, you secure your trade by adjusting to break even. Okay, and you continue holding the trade. Do not take partial profit. Allow the trade to hit fully. All right. So if this goes where you end up making $6, meanwhile you just lost only $1. So if you are risking $10, you are making what? $30. For those of us who have a bigger account, if we are risking $100, it means we are targeting what? $300. The reason I made mention of $20 because it's one of those All right, sorry for that breaking transmission. I wanted to take water a little. All right, so this is how the parabolics are work. So let's move to how we are going to be trading using the system. All right, and so basically, personally, I like H1 and M15 for entry, and then the Ichimoku comes in handy for you to trade with the trend. So anytime you put up the Ichimoku, all right, anything beneath, when price goes below the cloud, you are only selling. Remember, anything crash 1000, crash 500, and crash 300, wait for price to go below the cloud so that you're trading with the what trend. Okay, and so H1, let's put up our parabolic SAR. Good. So we have parabolic SAR. Let's start from here. Let's hide the Ichimoku a bit so that I can place our horizontal line. Now, so we have placed our line on the first signal that showed on the parabolic side, isn't it? And if we put up our Ichimoku, we'll notice that price is in a downtrend because it's beneath the cloud. So when should I actually not consider this? Whenever you have a buy signal on parabolics, meanwhile, price is beneath the cloud, do not look for sell opportunities from this point. All right, from this point until you get a new signal on your major time frame. So our major time frame is H1. Personally, this is the first signal. You just place a horizontal line there, and then you go to M15 for your entries. But if you see a buy signal, you should not consider taking or looking for sell opportunities until you get a fresh signal indicative that, yes, we want to continue a downtrend. We want to continue spikes towards the downside. I hope that's clear. All right, so we're starting with this first example because when price was below the cloud, you can see that parabolic star was saying buy until at this point where we got a sell signal. All right, so let's go to M15 to look for new entries. So let me just zoom out closely, and this strategy is amazing. It's going to give you guys serious edge in the market if you follow judiciously. So this is me starting off trading with what? A $20 account, right? So this was on H1 where parabolic star gave us the signal. So I'm just going to wait for a new signal. So this was a new signal. Now, in cases where you have a very long candle, all right, there is every possibility that if you take a sell trade, your stop loss at this point might be more than $1. So, but if you're using 0.05, okay, so what I'm going to do when I post this video, I'm going to post how to know the exact money you are going to lose, all right, how to calculate it so that if you know the exact money you're going to lose, say we are losing $1, we need to also know the exact lot size we need to put in place for us to risk just $1. So when I say risk $1, it doesn't mean open a trade with 0.50 and expect to risk $1. No, your stop loss, if our stop loss is here, we cannot risk 0.30 because when price gets to our stop loss, we must or we may have exceeded what $1. If you have a bigger account bigger than $20, you don't expect me to use $1. I personally, I'll be using a risk of $10 to $20, targeting $30 to $60, right? But I'm saying for those of you who are starting off with $50, you can use $2 for your risk, and your lot size and placement of stop loss determines how much you are actually going to lose. So I'm going to also post that money management video so that you're also going to know how many lot size you are supposed to use in order to risk that specific amount of money you have to risk. Okay, all right, so let's place our trade here, and remember we said the stop loss should be above the previous candle. So let's see, did this get to a 1:3? So placing this and stop loss here, we'll target 1:3. Okay, so if we extend, yes, so at this point we were able to hit 1:3, and so we made, there was no point price came to hit our stop loss. We had a lot of minor swings, but never did it hit what our stop loss, and that is good. Let me fade it a little because there is something you need to also see about this, which is going to make you guys excited. So when you are on a particular trade and it has not hit your take profit, and then you get a new signal. So example, this was the first signal. So we have a new signal here. You can enter a new trade while the first one is still running. So, and then target what? 1:3. Let's see. I think this also hits a 1:3. So remember, this first trade is already on. Meanwhile, we have another one, which we entered at this point. Okay, so we entered this at this point. Remember, we're entering after the candle has finished forming, because once the parabolic star gives us the signal, that's when the candle shows. All right, and then we extend. So did we hit a 1:3? Yes. So we had two trades that hit. So this first trade gave us $3, and then this other trade gave us $3. Was there any other signal? So we had a signal again, but I'm very certain this hits our stop loss. All right, so this hit our stop loss. Okay, this, because if you notice price when, yeah, so we lost $1 on this trade, but this particular 1-2 trades are, we are already giving us what, $5. So if you're starting with a $20 account, at that point you already have a $25, isn't it? So you can see how beautiful the strategy is. It's not about the loss, it's about the consistency. You're certainly going to make losses in trading, but so we are done with the first part. So you can see that at this point where parabolic star gave us an opposing signal, we are done with that. So the next time we're going to continue is this. So let's delete this. So it's a patient game. And then the next stop was here. Why are we stopping here? Because parabolic star said this is the end of the trend. All right, when parabolic star gave us a buy signal, you can see beneath the cloud a downtrend has already started. All right, so let's go to M15 minutes. So remember, this was the first sell signal. Price is already below the cloud to confirm that we are trading with the trend. Parabolic star is saying, okay, go look for your opportunities on M15. So let's look for our opportunities. Even if it's just one opportunity, you see, it's perfect, it's fine. Okay. So remember, I said at 1:2, always what? Adjust to what? Break even. And then allow your trade run. So short position, we enter here because parabolic star gave us a new signal here, and then we target 1:3. Did this hit a 1:3? Perfect. So at this point, we hit a 1:3. And so remember, we have already made $5. $5 plus $3, we have made what? $8 whooping profit. Is our account growing or not? It is growing. So we had another signal here, but obviously this one hit our stop loss because this didn't hit a 1:3, neither did it do a 1:2. So I'm not going to be teaching on the buy. I'm just going to. So let's look at a boom pair. Let's look at boom 500, and then we'll call it a day. You're going to experience losses, especially in ranging markets, but That's why I'm going to advise you to also join the mentorship so that you also know how to deal with ranging markets and better strategies. This is just good, yeah. So this is Boom 500. I mean, we had a lot of beautiful sales. Let's just look at one or two sales signals and then we focus on what's the spikes. So, or let's just focus on the spike. So let's look at scenarios where we had parabolic SAR. So the good thing about this strategy is even when price goes above the cloud, at this point, price went above the cloud, and then we put another line here to end that, yes, there is a potential for a sell. So let's look for buy opportunities on M15. Remember, H1 is what I'm using for my analysis, but recently I've been enjoying M15 as my major time frame and M5 for my entry. It has been amazing. So this was H1. Where did we get a new signal at this point? So did we hit a 1:3 here? Let's see. So this was where parabolics are given signal. So you're going to enjoy this strategy so much in trending market situations. So this was a 1:1.4. So it's not good in our own book. So these would have stopped you out. These would have stopped you out. So let's look for more opportunities. Would have lost $2 on that trade because none of them, they were all profitable. Yes, I know some of you might have ran away, but it's always good you stick to the plan. So in cases like this, let me zoom in closely. You see this, you may not get a signal on M15 because the next one already was. So that's the good thing about the strategy. It also helps prevent you from possible losses. So let's see this. Let me just cherry pick and go to where we had some good market conditions. So let's look at this. Let me put a line here and then and put a line here and then why is not working? Sorry. I'm trying to duplicate. Anyway, let me draw another line. Okay, so then let me put another one here. You can see that this was a new parabolic SAR indicating the start of a new buy opportunity. And where was the end? Look at the end. So once we see an opposing signal, we stop looking for opportunities for a buy. All right, so let's go to M15. So I've also advised you to learn how to trade both sides of the market, but not yet until your hands are, well, I say strong, until you get a hold of the strategy properly before you can think of. All right, so we are here on M15. Let's see if we had buy opportunities. So this was the first one. So this, when you have buy signals on the parabolic SAR, and then the candles are very long, like this one, avoid, because you can imagine what the stop loss is going to be. It's the best are those ones that have short candles, so avoid. So here to here, we had no trading opportunity. So we had a trading opportunity at this point. So let's see. Long position, parabolic SAR. You can see the short candle. Our stop loss below 1:3 secured. So the good thing with this is if you are supposed to make $3 catching spike, sometimes you because of the spike can be so long that it exceeds $3 and gets you up to $4. So we had another opportunity here. Let's see if it hits 1:3. So here. Okay. Okay, this got to 1:2.6. Not bad. At least you would have taken partial profits or at 1:2 adjusted to break even. So we made $3 here, and let's say we made about one. So the whole purpose of this is with the fact that we have a beautiful strategy. This is not really so serious anyway. Uh, this is just good. At least it doesn't have less than a 60% win rate. It's good. Apart from situations where you have a ranging market. Okay, so because of that, I would advise you can use M15 as your major time frame and M5 as your higher time frame, and you're going to enjoy yourself in a day using all the best. Let's look at Crash 500 for example today. Let's say we are using M15 for our analysis and then M5 for entry. Okay, so let's say we use M15 for our analysis. Already, first criteria is we can see that price is below the cloud and we need parabolic SAR to give us a signal. So we had parabolic SAR give us a signal here, and this was the end at this point. And then we had a new one at this point. And up to now, okay, this was the end. Yes, so this was when parabolic has told us to exit. So let's go to M5 and look for our opportunities starting from this point. So let's go to the first signal. Let me zoom in. So this was on M15. So we had our first signal here. So this hit our stop loss, $1. No worry. So at this point to this point, there was no trade. So we had our next signal here. Short position. So we took this trade after parabolic SAR gave us a signal. Did this hit our take profit? Perfect. So we had a what? 1:3 here. Let's see. Did we get another signal? Yes, we had another one, but the candle was a bit long. So let's see if we had, so stop loss above the previous candle. So this trade will still be running by now in my books. So it will be on a, yeah, already close to 2.7, 1:2.7. So if it goes down more, it will hit 1:3. So we lost $1 at this point, and we made 3 times of what we lost here. And then we just keep taking sell signals. You see another one here. I mean, if it spikes, so you just keep adding positions as long as your major time frame has not given you an exit. All right, as long as you've not gotten an exit. So let's look at 1 hour as our high time frame and M15 as our low time frame. So I'm going to just delete all the drawings. So let's go to those scenarios where we had parabolic SAR, price below Ichimoku. This works so well in situations where the market is trending. Example, in conditions like this, you're going to wreck the market so badly. Let's see. I don't want to go back so much. It's going to affect the record. So, but you can do it on, but okay, let's look at H4. Let's look at H4 so that we get a stronger or more compact. Okay, so I like H4 when I want to take a long travel. All right, so let's look at this. It's something if I want to hold for weeks or days. So we had parabolic price below Ichimoku on H4, right? And then H1 is going to be our entry. So let's start from this particular one, from this point. So where was the exit here? So at this point, we are not going to consider a sell. So H4 is actually beautiful, but you need some good capital. Notwithstanding, even without capital, you can just reduce your lot size. And so let's look at all these examples from this point, and then where did we get the exit here? So let's go to H1 and look out for examples. So guys, this is really beautiful, very, very beautiful. It's an amazing strategy, but there is more than this, a whole lot more than this in the mentorship. Okay, so I'm just going to encourage, send me a message on WhatsApp, and I'm going to be giving a major discount for everyone who are subscribers to the channel, for your loyalty, your patience, and everything. All right, so looking at this, this is our H4, and this was the first signal we got. So some persons might say, sir, why can't we enter with the H4? No, don't enter because you might have a drawback. Enter on a new signal, all right? So this is the new signal, and then I think I'm going to do the part 2, but it's going to be those in the mentorship platform, how to avoid some kind of trading conditions, right? So this was good. It hit our 1:3 without ever coming to hit our stop loss. All right, so let's secure that particular trade. We had another opportunity here. So let's say I reached $100 on this trade. I made about $300. So we have another one here. So this is where parabolic star gave me. So there is a better indicator for this, because sometimes parabolic star might give you a late entry. So this hit our stop loss. All right, so we lost $100, but we are still on a gain of about. Remember, I also said if the stop loss is, if the candle is too small, you can place your stop loss above 2 candles higher. So if you follow that rule, this also hit a 1:3, extending it. So that's about $600. So we had another opportunity here. Did this hit our take profit? Yes. Yeah, it hit our take profit. So we had a sell signal, although note on H4 at this point, we had an exit. So what you can do is to break even, okay? Just in case. All right, you could have broken even. So from this point to this point, no new signal. And then we had new signals emanating from this point. All right, so you can see how long the candle is. What you can do, you can wait for a 50% retracement and then enter the trade, or you just enter and then reduce your lot size, whichever, or the stop loss should be above the previous candle. And let's see if we hit the 1:3 on this trade. Yes, we did, because if we extend, you can see this was the point it's hit, right? So we had another signal here, stop loss above. Did it hit the 1:3? I mean, this H4 and H1 combo is doing a lot of magic, guys. It's doing a lot of magic. but you should be ready to manage the emotions that comes with it. All right, the drawdowns and all of them. So did this hit a 1:3? Let's see. Okay, I think you did. I mean, you must have held for long. All right, but this is good. These are all swing trades, and H4, this was a signal. This didn't really do so much. So guys, this is the end of this video, and you can see I gave you guys a clear pattern for scaling your account, growing your account. You can use M15 and M5 for your entry, for those of you who have time. And this is beautiful. I mean, this is beautiful. It enables you trade with the trend and also gives you a good money management. This is how strategies should look like on the internet. I I would give you better strategies. I will give you a whole lot more. So I'm also going to encourage you, join the mentorship. Send me a message on WhatsApp. I'm going to leave my number on the description. Send me a message on WhatsApp, and then let's help you with better strategies to above 50% win rate. And then when you now combine it with 1:3, I mean, it's going to be amazing. Notwithstanding, we have put up a good team of individuals that are going to focus on what's giving signals, and it's going to be amazing henceforth. All right. So as much as we teach, as much as we give signals for free, I also want to encourage you to be a part of the mentorship and get the best. We love you, and we will keep doing all we can for everybody to succeed.